Funding for Market Journal is provided by the Nebraska Corn Board.
When we transform Nebraska corn into ethanol, it doesn't disappear from the food supply. It just takes a little detour. Ethanol is made from the starch. The rest of the corn becomes livestock feed to create meat and dairy products, corn oil, sweetener, and other food ingredients, and maybe a little carbon dioxide to make your soft drinks fizzy. Homegrown ethanol helps satisfy America's hunger for energy and the world's appetite for feed and food. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Derrell Peel describes the outlook for the U.S. beef industry. Ron Plain looks at margins for pig producers. Mary Drewnoski explains how farmers and ranchers can use cover crops for grazing. And Rick Rasby talks about sampling hay. Oklahoma State Extension livestock marketing specialist Derrell Peel is our cattle market analyst this week. U.S. beef and veal exports in June were down less than 0.5% from a year ago. Japan was by far the largest buyer, taking almost 31% of this country's total shipments. The USDA will release numbers next week on meat prices for the month of July and cattle on feed estimates. We talked with Derrell Wednesday morning at the Nebraska Grazing Conference in Kearney. We started by discussing how the U.S. beef industry, including land use and overall inventory, has changed over the last 10 years.
Agriculture in the U.S. has been through a tremendous amount of dynamics in the last decade. Obviously, we've seen unprecedented just about everything. So, unprecedented. And it started really when the ethanol boom took off in 2007, late 2006. We saw those dramatic changes in corn prices. That led changes in all other crop prices, basically, because it's all tied together. And part of what I was talking about this morning was that cattle industry, as a user of forage, not only uses the permanent forage, if you will, the rangeland resources that we have largely in the western half of the country, but a lot of cropland or potential cropland that has been used at pasture, can be used as pasture, as well as other forage type crops that we grow on cropland. And so anything that changes crop agriculture in this country is going to have an impact on cattle, because it's going to change the market incentives and the economics of those forage resources that can vary.
The last time we talked in spring, we were talking about the expansion, and we also mentioned then that we wouldn't have a July cattle inventory. Do you have a better handle on where the stopping point is for expansion and how far along the process cattle producers are?
Well, we don't really have much data because we didn't get our mid-year report, but at the same time, I've changed my views a little bit here in the last few months, and I think there's some anecdotal indications that because we've had such a dramatic adjustment in feeder cattle prices in the first half of 2016, coming off of a big adjustment in the last part of 2015, I think it's possible that we're putting the brakes on a little quicker than I would have said just 3 or 4 months ago. So we're clearly expanding, I think pretty clearly expanding in 2016. That was going to happen in any event. I think the real question is going into 2017, depending on how much expansion we have in 2016, then how much more, if any, expansion we might see in 2017. And at this point, I think it's possible that we could be mostly done by the end of 2016. I'm not ready to completely say that, or at least not with a lot of confidence. I think it's still probably likely we see some expansion in 2017, but it might be pretty minimal, again, as we appear to have put the brakes on a little bit quicker in terms of herd expansion.
Give me your analysis of what's happening to cattle markets and what has happened so far this summer.
Well, we're still reeling a lot from everything that's happened in the last 12 months on the backside of this thing. Of course, everything we've seen in the last 12 months was really the backside of an unprecedented thing that happened in the 2 years prior to that in terms of the run-up in prices. And what's important about where we are today is that all of that's behind us. I think the real important message for producers is that all of that stuff, whether it was good for you or bad for you or some of both at various times, it's done with now. We're kind of rebalanced. We've got feeder cattle prices, which is a constellation of prices, but across the board we've generally got them back in line sort of with each other, and more importantly with fed cattle prices. We've kind of got box beef and everything kind of back in line, so there's no real need for any sort of major adjustments. Again, we've got herd expansion happening, some inertia there that's going to play out here over the next year or two, but in total, I think we can look for a lot more stability. We've got lower prices, but given where we are going forward, those prices will work, I think, more for all sectors than they have in recent months.
More stability, but do you still see a downward trend as we go forward?
I think it's likely because we are in an increasing supply scenario. Certainly there will be more supply pressure. So the real answer to the question then is what happens on the demand side. And there's reason to be pretty optimistic there. When we went through the short supplies and record high prices, what we saw that we didn't know would happen or weren't confident would happen was that beef prices did take that very well. Beef demand stayed strong through high prices when some people weren't buying beef, but we didn't have as much beef. The real challenge coming forward is as prices come down, do those folks that got priced out of the market come back into the market? At this point in time, that's pretty encouraging from a domestic market standpoint. The other thing that will be important, of course, is the trade side, and that's also one that appears to be slowly but improving. So that if we have that domestic plus international demand base, then that moderates the supply pressure, and it means that we could see limited, but probably still some erosion of prices over the next couple of years.
You are anticipating that beef prices will come down in the store then?
They have begun to come down quite slowly, sometimes to the frustration of producers. They think they ought to come down faster. I keep reminding them that we really don't want beef to adjust that fast in the market. And they, retailers are making a lot of money. Well, that's good because that means they're going to want to sell more beef. And so, that's a good thing, really. And so as those, there's lots of meats out there. Beef is increasing for the first time in several years. We've got lots of pork and poultry, and yet beef prices are holding up well. I'd say that's all a good sign for the beef industry. We will see erosion in those retail prices, but as long as it's a moderate kind of erosion, that's a good sign.
One foreign thing to note, the U.S. and Brazil have announced they'll loosen their restrictions on beef trade. Tell me how big of a deal that is.
From the standpoint of the market impacts, allowing fresh and frozen beef from Brazil for the first time in quite a number of years is really not going to be a major impact on the market. We've continued to import, even when that market was closed to the fresh and frozen beef, we've continued to import cooked product and processed product from Brazil. People forget that we have a beef import law in this country. There's tariff rate quotas set. Some countries have a specific quota, the major importers, Australia, New Zealand, Argentina, and so on. Brazil does not have a country-specific quota. So there's an other category that's less than 10% of the total imports allowed. Brazil will fight for a share of that less than 10% unallocated component. Nicaragua and some other countries fill about 2/3 of that now. So when you get through all of that, what it means is that realistically Brazil has a limited access to the market. They will have to earn that market share. They're going to have to outcompete somebody for that to be much bigger than that. More fresh and frozen may offset or may substitute for some of the cooked product that's coming in now, so there might not be as much net increase. It's not clear how much of that will happen, but very, very much clearly, Brazilian product will compete against Australian and New Zealand product as processing beef. So again, there's probably some substitution going to take place there. So the net effect is, at least in the short run, not a big deal.
Next week, Elaine Cubb will join us to look at corn and soybean price reactions to the USDA's August crop report. We also have a look at hog markets this week with University of Missouri Extension economist Ron Plain. U.S. pork exports in June were 4.5% higher than a year ago. The world's most populous nation continues to support the foreign market. May and June were China's best 2 months since February and March of 2014. Its imports in June were nearly 144% higher than June 2015 and enough to make it the third largest buyer. With data dating back to 1989, the United States exported its highest amount of pork to China in 2011. 2016 is on pace to come close to that mark. Through the first 6 months of the year, it's met 45% of that total. For U.S. producers, however, July and August have seen a sharp downward trend of prices. That's where we started when we talked with Ron Wednesday morning.
It's been a sharp drop. We're looking at carcass prices around $60 per hundredweight delivered to the slaughter plants. That's down $20 from what we had 7 weeks earlier. So it's been a very steep and continuing slide in prices for 2 months now.
Is this sharper than the normal seasonal pattern?
Yes, it is. If you look at the situation, normally the peak in prices come in June, and that's probably what we had this year. What was unusual this year is that the trade was expecting late summer prices to be higher than June prices. Futures for both July and August were trading above June most of the spring and summer, and that didn't turn out to be right, so it's been a pretty fast sell-off.
How has this downward pressure impacted margins?
Well, we've gone from making good money to probably a little bit underwater right now. Iowa State calculations said $32 per head profit in June. The July numbers are going to be probably a little bit less. But if you look at cost of production right now, we're somewhere probably $62, $64 per 100 pounds of carcass, and the price is around $60. So red ink today, it looks like.
How much pork have producers really been outputting here?
Well, and we're not up a whole lot, 1 to 2% on slaughter, a little bit less than that on total pork production because weights have been down. In fact, the last week's Iowa-Minnesota slaughter weights was the lightest since October of 2013, but we've been ticking up. The expectation is up 2.5% in slaughter this fall, and probably have a new record for fourth quarter hog slaughter.
What do you think that means for 2017 as far as what producers are going to be willing to produce?
Well, we've made some money raising hogs the last couple of years, so we're likely to see some expansion, and that's kind of what the slaughter numbers indicate. Also, we got some new slaughter plants coming online, and they're going to need hogs. So I'm looking for hog slaughter next year to be a tad bit higher than what we've got this year.
Let's talk about exports. They were up in June, at least compared to June 2015, and China has been a big player. By how much are they supporting that market?
Yes, we're up like 160% in exports to China in the first half of this year compared to a year ago. So that's more than the total increase. We're net down on everybody else. But China's short on pork. They've been seeing record prices, and they're trying to cover that by importing pork. And I expect we're going to see a lot of U.S. pork continue to move into China for the rest of this year.
Is that a long-term thing that could continue?
Good question, Jeff. Historically, the Chinese government has wanted to be self-sufficient in pork. They haven't been willing to import lots of it when they come up short, but long term, I expect they're going to push their production back up, and we'll see these shipments dwindle back down next year.
How would you characterize domestic demand?
Domestic demand usually goes with the economy, and thus far this year it's not been doing too well. Economic growth has been about 1% or so in the first half of this year, and domestic demand for meats and pork in particular looks pretty flat compared to a year ago.
So if we talk about overall profitability in 2016, this last month or so, has it taken an ugly turn, or can producers still hang in?
Well, we're down around a break-even situation, but it's going to get worse as we move through the rest of the year. Not decidedly worse. Yes, hog price is going to come down, but we're looking at a record or near record corn harvest, and so feed costs are going to be declining also. So yes, some red ink, but not too bad of a situation, we don't think.
Where do you think we set the floor at?
Gosh, that's a good question, Jeff. We're looking at record hog slaughter. If we have troubles with capacity, we could see some very, very low prices in December. Last fall, we bottomed out at around $50 on a carcass weight basis. The futures market's saying that's probably where we're going to bottom this year. But if hog slaughter comes in above expectations, it could be still lower than that.
The USDA is scheduled to release its updated estimates on the size of the pork industry next month when it issues its quarterly hogs and pigs report at the end of September. U.S. ag land values in 2016 slipped 0.3% from 2015. Cropland, however, recorded a slightly more noticeable decline. It dropped $40 an acre, or 1% across the country. Cropland values in Nebraska slid 4.3% to average $4,850 per acre. Those numbers come from the USDA's annual Land Values Report. A day earlier, the agency released estimates on farm spending. That data shows farm production expenditures in 2015 were 8.8% lower than 2014. Nebraska stood out in one area. Taxes here accounted for 5.3% of total expenditures, a bigger chunk than any other state included in the report. Cover crops are sparsely grown across the United States. The USDA's most recent census of ag says producers in 2012 planted cover crops on 10.3 million acres across the country, with Texas leading the way. We've discussed the use of cover crops in corn, soybean, and wheat rotations previously on Market Journal. This week we talked with Nebraska Extension Beef Systems Specialist Mary Drewnoski to learn about grazing cover crops. We spoke with Mary at the Nebraska Grazing Conference in Kearney and began by asking why producers might be interested in using cover crops as a forage option.
Well, the benefits of cover crops can be that you can get dual purpose. You can get some of the conservation benefits, but then we can also produce some very high quality feed for a relatively low cost. And when we're looking at some of these cover crops that are available, we can see that we can get really low cost of gains on calves, or we can feed cows for a fairly low cost system.
What are you planting and when are you planting it?
Well, what we plant really depends on when we can plant. And so if we look at opportunities for fall forage, we're really looking at planting after wheat as one opportunity. And so that would be in July and early August. And so that might be warm season grasses like sorghum Sudan or pearl millet. Those are really great options. Once you get about the 1st of August, we really switch to cool season, winter sensitive species like oats and brassicas. Brassicas are really turnips, radishes, rape, those type of things are great sources of feed during that period of time. And then when we get later than about the first week of September, we really need to start thinking about planting something for spring forage production. And so we're looking at rye or triticale. And really, we're not going to get a lot of fall forage, but it'll come on in the spring, and early spring we can get some grazing in before your next cash crop.
Which animals would be grazing this then in the fall?
So in the fall, I really think this is a great opportunity to develop heifers or to background calves. And this year, looking at the way the markets are lining up at the moment, this may be the year to consider backgrounding some of your calves if you're a cow-calf producer. It looks like the weight slide on prices is not really all that steep, and so taking a 500-pound calf and getting them up into the 600-pound range may be a great opportunity. We're getting gains on those cool seasons, so oats and brassicas gains of about 1.5 to 2 pound a day, and our cost of gains are somewhere around 25 to 50 cents per pound.
Can you tell me more about the nutrient content of some of those cover crops that you're using?
So when we look at our warm seasons, they're a little bit lower quality by the time we get to start grazing them. They tend to be, somewhere around 55 to 65% TDN, and they can range significantly in protein, but they can be anywhere from 8 to 15% crude protein. Now our cool seasons, like our oats and our brassicas, they're extremely high quality when planted in the late summer for fall grazing. We're seeing TDN ranging on oats from 60 to 70, and on the brassicas, we're more in the 75 to 80% TDN range. And then protein really depends a lot on how much nitrogen is available in the soil, but typically we get protein levels 15 to 20% crude protein.
Any helpful guidelines for turning animals out onto ground like this?
Well, the one thing I would say when we're thinking about grazing animals on these really high quality forages, we want to make sure we have enough fiber in the diet. And so That's why I really like having quite a bit of oats in a mix with brassicas. These brassicas are actually almost like a concentrate. And so I tell people, we want to think about 50 to 60 pounds of oats in with 3 or 4 pounds of turnips when you're seeding it. And that'll really help with keeping those cattle not to have digestive upsets. If you do have a lot of brassica, because sometimes if you got a lot of nitrogen, they can really take over, then we might want to consider giving them access to some dry hay or maybe corn stalks.
Mary says UNL researchers are still studying several aspects of using cover crops for grazing, such as the subsequent effect on crop yields, their water usage, and water needs of the grazing animals. You can learn more about using cover crops as a forage by attending a Nebraska Extension field day near Bolus, Nebraska on August 25th. We'll link to more information about that event on the Market Journal homepage. The latest report from Nebraska's National Agricultural Statistics Service says the third cutting of alfalfa in the state is 59% complete. The crop is rated 77% good to excellent. At this week's Nebraska Grazing Conference, we talked with Nebraska Extension's Rick Rasby about why livestock producers might want to sample hay and grasses before feeding them.
We've had a pretty good hay crop, and one of the challenges I think early on in the hay season was all the moisture we received in May, and so it's kind of difficult to get hay up at that time. But I think about, as you think about what's coming up next, how are you going to put together a feeding program for the cow herd? If you don't have all the grazing opportunities that you'd like, you got to fall back to harvested forages. And so having a good handle on what you have in that stackyard would be pretty important.
Tell me why it's important, why there could be problem areas there.
Well, the thing is that we had a pretty good growing season, except for a little bit of a challenge there early on, and so some of that hay is going to be different in regards to the quality, probably a little bit more mature, and so as you think about how you might sample alfalfa, first cutting separate from second, third, and fourth, and then we're still putting up some grass hay, but so grass hay put up this time of year is probably going to be more mature. It will be more mature and lower in quality. And so if you're going to sample grass hays in Nebraska, probably sample early cut versus late cut so you get a handle on protein and energy.
Yeah, what are you looking for in that sample?
Yeah, that's a real good question. And the thing is to make sure you get a good sample, because the results you get are only a result of taking a good sample and representative sample. And so make sure that the samples that you take with a forage probe. Grab sample's not going to work real good, okay? And so a forage probe, and most extension offices have a forage probe. And so use that and then follow the instructions in regards to where you're going to send that sample and how you might package it. But the thing I would test for would be moisture for sure, and then protein and energy in the form of TDN. And then if you think you have a mineral problem, I'd sure check for minerals, but usually NIR will give you calcium and phosphorus, so that works out pretty good.
How do you interpret and use those results then?
Yeah, and I think that's important. Once you get the results, and how do you use the results, and so they'll give you two different ways that's going to be delivered to you, as fed, that means moisture in it, or dry matter. And so all the nutrient requirements for beef cattle are on a dry matter basis, so you're going to look at the dry matter component. And then if you're not real good at putting together rations, there's a lot of extension educators that can help you do that, and so and they really feel comfortable with that, and so that'd be an opportunity if you really want to take a look at how to put together some rations.
Now with this week's weather forecast, here's Nebraska Extension ag climatologist Al Dutcher.
Well, folks, here we go for the weekly forecast. During this last 7 days, of course, we've seen some precipitation break out across extreme southern Nebraska in response to a cold front that moved through last weekend. We were expecting to see that precipitation a little bit farther to the north, basically I-80 corridor southward to the Kansas, but because that cold front pushed a little bit farther south than originally projected, we've seen the heaviest of precipitation fall across northern Kansas. Of course, then the heat returned in earnest as we got through that Tuesday and Wednesday time frame. Heat indices commonly across the state were in the 105 to 110 range, specifically in the eastern half of the state. Then the cold front that moved through on Thursday developed thunderstorm activity, the heaviest of it across northeastern Nebraska. The line did fill in through south central Nebraska, but precipitation totals were much lighter than we would like to have seen. We didn't get the heavy precipitation we've seen across northern portions of Iowa and southern Minnesota associated with this frontal boundary, where 2-day totals range anywhere from 5 to upwards of 15 inches of moisture. I mean, we need precipitation, but we don't need it that bad. Now, as we go through this next 7-day period, unfortunately, we'll see a little bit cooler weather as the models have become a little bit cooler into the extended, but we're not seeing much in the way of significant moisture. There's a couple outside chances. Perhaps maybe one of these the models have underestimated, and we'll see some decent moisture, but right now I would say that the odds are very slim. So here we are today with that trough that's now starting to move to the east of us. We have a little bit of activity, or basically lift, on the very far western fringes of this. So extreme east central, northeast Nebraska may see a scattered shower this morning, but most of this activity will move toward the northeast into the Great Lakes region. You'll notice that the upper air flow is from the northwest to the southeast, so we got some cooler air into the region, and that will hold for the weekend. So as we go to tomorrow, what we will notice is the ridge lifts a little bit farther to the north. We are still going to see temperatures that are seasonal. We're not looking at much in the way of any 90-degree temperatures. Most of the lift will associate with the trough will be over the lower Ohio River Valley and the upper Great Lakes region. And by the time we get to Monday, we see that another piece of energy tries to move its way across the northern plains, and there is some energy lifting up from the southern plains, but right now it looks like it will remain primarily to the south of us, although there is some indications that we could see a few scattered thunderstorms develop across southeast Nebraska. As we go into Tuesday, we start to see the ridge lifting back up and a little bit warmer air moves into our region. We were looking at temperatures that are approaching the 90-degree mark. We're not expecting widespread 90-degree weather with this ridge as it builds in. Heavy precipitation expected in the eastern Corn Belt in association with tropical energy that has moved up in association with this front. And the convergence will bring some very significant moisture to this part of the country. As we go into Wednesday, we see that the trough reforms itself over the upper Great Lakes region. We see these blues here, meaning subsiding air. So once again, we're going to see a northwest flow, keeping us in the cool portion of the equation, back into the mid to upper 80s. And then as we get into Thursday, we see a little bit of monsoon moisture starting to show up in southeastern portions of Wyoming. That will spread across the panhandle, possibly developing some thunderstorm activity. Would not be shocked whatsoever that some of this will make it into eastern Nebraska. And as we get into Friday, another big system is poised to move down next week, and this looks to bring some significantly cooler air into the region and a refreshing drop back into the 70s and the possibility of heavy precipitation. So as we look at the 8 to 14-day forecast, we see normal temperatures and reflection with this cold front coming in during the weekend. And in terms of precipitation, it looks like the heaviest of precipitation remains to our south and east.
Thanks, Al. Today's interviews can be found individually on the Market Journal website and through the Market Journal mobile app. They include information on cattle markets, hog prices, cover crops as a forage option, and sampling hay. As always, you can keep up with Market Journal during the week by following us on Instagram, Facebook, and Twitter. Next week, Elaine Cubb will analyze corn and soybean markets, and Tina Barrett will discuss how changes to overtime rules will impact ag producers. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.